Oh, let's try that. Let's try turning my microphone on. Good morning, everyone. Welcome to our Friday morning trading session, the end of another work week. A reminder before it slips my memory that there will be no trading room on Monday. I will try to point it out again at the end of the session, but I got to do these things while I think of them. I'm getting older. My memory is fading. Okay. We have got ourselves a little bit of an opening gap here this morning, and it looks like our first eagle signal just printed. So yesterday's trading mostly bullish, although there were some pretty wild swings through the day. But the day finished on a slightly bullish note, and we have a little bit of an opening gap right through here now, just below the market. From a longer term point of view, the market does look a little bit more bearish. Oop, sorry, thanks, Bob. Bob says you haven't turned your monitor on. Okay, let's try that. All right, well, we'll just hang with them here for a few minutes. I'm curious to see what they're going to do with that opening gap. If you'd like to do that, we've got like first micro macro crosses here. We have the first eagle signal. A second push entry opportunity might be the way to go with that. It is, after all, only a couple minutes since the opening bell. All right, well, the Raptor flashing a couple of counter trend signals. And again, here's an opportunity to go with the second push entry. Oh, I don't know if I want to go in for the full risk amount here. Let's dial this down a little bit. So all I've really done here is I've allowed the signal to print. I wait for the market to flinch. You can see it's flinching here off the primary support line. The idea is that I'm not going to short the market until it renews that downward push. We get some fresh downward momentum. Not a bad idea, especially if you are considering a counter trend style trade. Remember now, the counter trend signal, that's the number 2 signal. There's 2 components that you must have in order to trade counter trend. First, you need to have a trend. Then you need to have what we refer to as the test of the extreme. In this case, the extreme is the high and the failure. You need to see that uptrend struggling to continue. And that tells you that there's a good chance the market may try to go the other way. Our target for a number 2 soft edge sell would be the hard edge of the trading band. Oh, okay, so we can close that order out. You could interpret this signal here as a double pullback or even a hard edge bounce. Even though technically it did not get right to the hard edge, it still has the same kind of attributes. Plus, we've got another second push entry opportunity. What time is it? Oh, we're about 7 minutes in. This does seem to be a time that we tend to get a signal about 5-6 minutes into the session. All right. If you wanted to extend your target, the next resistance line makes the most sense. So somewhere here around 56.70 would be sort of your ultimate, well, I won't say ultimate target, but a reasonable target for this move. We've just hit our break-even trigger, as you can see. And my profit objective, my other profit objective was just above here, 56.63. So we're just kind of kissing it. If this bar finishes bullish, we would have hit that profit target. Right now, we're just one tick below it. But I will try to extend it and see if I can't get a couple extra ticks. Oh, you stinkers, you're going to pull back on me now. Don't you dare. Now let me point out here the double pullback signal. This is the one Raptor signal that it was impossible to program, but it's a good one to bear in mind. Normally, I'll point it out when we see a couple of number 3 signals print, but it tends to happen when the market does this little bit of a sideways drift. I suppose it occurs the same time we get the 4 arrow consolidations in the Hawk, we get the late filter entries in the Falcon. The Eagle doesn't really have a comparable type signal. But what happens is that the market will pull back into the trading cloud. It will try to come out. It produces a buy signal. It pulls back again into the trading cloud, tries to come out, produces another signal. That is the double pullback signal. That's the same kind of thing that we had going on here this morning. We got the sideways drift. We have the market pulling back. It produced a buy signal. It pulled back. It produced another buy signal. That's the double pullback. It is a continuation signal as well, and like I say, very often it will happen when you get some number 3 signals printing. Sometimes you'll get number 3 signals printing in tandem, and that makes for a very strong double pullback. I'm not going to be able to find one here. The market's just had some exceptional momentum the last couple of days. Oh, here we go. So here you can see we've got some number 3 signals printing in a row, and that's a double pullback. And again, you can see the market in that sideways drift. It pulls back. It comes out of that pullback and produces a buy signal. That's your double pullback. So just a little something for you to tuck in the back of your mind. When you get the market, you think it's just wandering sideways, it may actually be setting up for a bigger opportunity. So I got tagged at break even there, and had I left my profit target in play, as I should have done, I think the market did just get high enough to find the profit objective, and now we are flinching again. This might be a little bit of a double top, another test of the extreme. Getting another macro pullback signal here on the Hawk as well, and possibly working a late filter entry signal in the Falcon. So a lot of things kind of queuing up here. That was the eagle signal out of the gate, and it has also found its profit objective. So another great signal for the eagle out of the open. I'm going to have to man up and start taking those. Every time I look at them, they work out. Aspen asking, Eric, just a thought. Do you not like to trail your stops at the low of the previous swing or at least 3 bars away? Yes, I did have my auto break even working on the Raptor trade that we took. And unfortunately for me, let's see, I got in 56.58. So I bought in around there. Initial stop was something like this. I was just in the process of rolling or moving my auto break even out of the way. I wanted to move it a little bit higher because I adjusted my profit target to be up here just before the secondary resistance line. And my auto break even was sitting right about here. I would just grabbed it to move it when it engaged. So then my stop was rolled up to here. And I got tagged out, and here we are. So I still think, if you're long this trade, we've got a little bit more structure now. You can certainly roll your stops to here, or maybe even take them to break even at this point. After all, if we fail one more time, this is almost like a triple top, right? If the market turns again, you would have three hits here at 56.63. That might tell you that the market's really not all that keen on heading higher. But I think we're going to see this next resistance zone. Just my 2 cents worth. Aspen asks, so the auto break even is done by the computer? Yes. If I have my automated break even engaged, once that price is hit, the trade manager will force the break even or force the stop to break even. And I have it set at break even +1, but you can capture as many ticks as are available. So you can capture 2 or 3 or 5 or 10 ticks, providing there are that many ticks available. Break even +1 is the default. And then we have the manual break even button right here. Let's see, oops, let's try this, there we go. So we've got a late filter entry now on the Falcon. You could take this order also on the Raptor, by the way. It's the same order. Oh, they slipped me a tick, you stinkers. Let's get my tick back. There we go. So this now, the late filter entry signal, like I said, it's mirrored on the Raptor, so you Raptor owners, please don't feel like you're missing out on something. Now, here, I'll show you. Let's watch the auto break even in play. So if the market gets up here, hits the auto break even, the trade manager will automatically grab my stop from below there at 56.48, and it will force it up to 56.64.75. That will be break even plus one tick. Now I tend to set my break even objectives at about 75% of the way to the profit target. I figure if the market gets 75 or 80% of the way to the profit target and fails, give me the break-even stop out. That's my logic. It works most of the time, but not always, as you've seen. And you stinkers here, are you going to turn on me again? Oh my gosh. Get away from here. Oh, no love today from the market. My gosh. Two break-even stop outs. Well, break even plus one tick, but that tick's going to go to the broker. Okay, things getting a little bit more bearish. We're seeing a little bit of a deeper retracement. The hawk back into yellow bars. The Falcon trend line already turning over, and the Raptor halfways toward a counter trend signal. Well, I was hoping for a little bit more of a test of the extreme, the Raptor being a little bit subtle at the moment, a little bit coy. No, no sound problem, David. Just nothing to talk about here at the moment. We're just in a little bit of a transition, I feel. I'm waiting for the Raptor to give me that test of the extreme, but here on the Hawk, we might be producing a red bar buy signal, which of course is open to a shorting opportunity as well. The signal is not complete yet, however. We have the warning dot, we have the red bar, but we haven't confirmed the buy signal at the moment. There it is. Now with the red bar buy on your Hawk, doggone it, why did I ever do that? All right, here we go. Let's get rid of that. Let's do this. Let's do this. With the red bar buy, it is a with trend signal, but because it tends to happen near the end of a trend, a lot of times I will try a counter trend. I will sell the failure of it and look for a short below it. Now, one thing you need to bear in mind with the red bar buy signal is it's not the strongest of the signals, so when it develops, a lot of times you may just use it as an early warning that a trend may be starting to unwind. If it does unwind, we are very likely to see a first micro macro cross lower print in more or less the same neighborhood, price neighborhood. All right, so here is our test of the extreme, and that would have made it a probable buy as well. You would want to take it on target. It looks like it just made the profit objective, and now we may be seeing a test of the extreme and a failure, in which case we're going to get a trend change signal in the Falcon and a number 2 counter trend signal here in the Raptor. Yeah, there wasn't much to talk about, David. So just kind of twiddling my thumbs, checking out a few charts, but wasn't too much going on. All right, no warning just yet, but this does have all the makings of a counter trend signal. So there's the Falcon. We've produced the trend change signal in the Falcon. We've got the red bar buy signal that we're going to short the failure of. And as I mentioned, when you get the market breaking down below the red bar buy, it isn't too long afterwards that you get the first micro macro cross, and that's what we've got going on right now. Oops, that yellow bar is going to spoil it. Yeah, there you go, Aspen. Aspen says I should be playing some meditation music, like what you have when you're waiting on hold. That's a good idea. I don't know if I can do that. John's asking, will you explain the micro-macro cross in the Raptor? It is actually not a Raptor signal. The first micro-macro cross is unique to the Hawk. All the tools have their own signals. All the tools have been programmed for specific market conditions. So with the Hawk, here I'll go back here to where the lines actually cross. The first micro-macro cross is the first signal that is in sync after the micro line and macro lines cross. It's a high probability signal. You can see the micro line, that's the thin one, crosses the macro line, that's the thick one. And this is the first signal that occurs when everything is in sync. Now notice we have another first micro-macro cross right here a few minutes later. And you might be saying, well, Eric, how can that be a first micro-macro cross? The lines did not cross over. That is true, but the condition remains the same. Everything goes out of sync and then comes back into sync. So filter is out of sync, trend lines are out of sync, bar colors are out of sync, and then they come back into sync. So that is also technically a first micro-macro cross and a high probability signal. Here is another one. Yes, we took a little heat, but it still worked out. That was followed by yet another one right here. So it's a very strong signal and one that we tend to look for in the Hawk. The Raptor, while it does not have technically have a first micro-macro cross signal, it does have comparable signals. If I dial back here to where all that was happening, you can see we do get the number 1 signal printing with that cloud crossover. Because the Raptor is a hybrid, it does tend to sacrifice quantity of signals for quality of signals. People are always asking about these secondary signals that are printing. Can I take those? Yes, you can take those. Very often they will coincide with a signal on the Hawk or perhaps the Falcon. But if you're looking for your higher probability signals, you want to focus on the ones that tend to be printing and labeled. Now, right now we have our hard edge bounce signal printing. So the market's still in a little bit of a transition. It may well go up from here. I'm going to see if I get that number 2 signal, the soft edge sell, because I'm already short on the Hawk. And the Hawk, suggestive now of a lot of sideways trading. We've got a lot of yellow bar clusters. They're printing more or less the same price level, and that suggests that the market is in a bit of a sideways range. Francisco says, I'd like to see these signals labeled like the signals on the Raptor. I'm not the one you need to tell. You know, Adam pays attention when you guys and girls make suggestions to him. So if there's something that you would like to see, or if there is, a problem you're having when you're trading, he's the guy to mention it to. He can make these things happen. That's how the Geiger counter came about. This little speedometer type dealie was because owner said, "Hey, this is a problem I'm having. How do I know when the market pressures might be changing, when it's time to get out?" So Adam and the programmers got together and they cracked that nut, and the Geiger counter came out of that. So they're really trying hard to get to this resistance line at 56.68 3/4. I think they might just make it too. Aspen says he's thinking about picking up the trade forecaster. Now that trade forecaster is this tool right here. I happen to have it on my Eagle chart. And what the trade forecaster does is it tells you what your current market environment is and what the next market environment is most likely to be. So right now, we are finishing up with swing mode, and it looks like in about 5-6 minutes time, we're going to be full on in scalp mode. Oh, goody. So what does that mean for you? Well, it tells you, if you're in a scalping environment, we're going to anticipate that the follow through might be a little bit less. Therefore, it might be prudent to take profit on target. We may need to run a slightly wider stop, so we'll go in with fewer contracts because, the market may be a little more erratic, so we don't want to get stopped out too early. The exact opposite is true when the market is in trend mode, of course. We would expect more follow through. We would expect the market maybe to find its a wider profit target. So maybe we want to run a tighter stop, take a few more contracts, try to get a little bit more profit out of the trade. It's been a very well received piece of software, Aspen. I can tell you that. A lot of people really liking the trade forecaster. At the end of the day, however, it boils down to one thing and one thing only. Does it help you make a trading decision? If it does, then by all means, pick it up. If it doesn't, we all need to avoid the temptation to clutter our charts. And it's a common problem for everybody. But is it useful? Yes, definitely. But again, the bottom line is, will it be useful for you? If you think so, pick it up. If you think it may interfere with your decision making, then don't pick it up. That's how people get into that whole analysis paralysis thing too, right? You've seen the charts. I wonder if I still have that chart. 1 second. I made a copy of this chart because I couldn't believe all the indicators this person was watching. This is a chart of someone who came to me for coaching many years ago. So they were running pretty much everything they could think of to throw at the market in an attempt to figure out what was going to happen next. And it's one thing to have a bunch of indicators on your chart. Most of the time, the indicators duplicate each other. You know, there isn't really that much difference between MACD and the ultimate oscillator. The programming is really very simple, or pardon me, similar. Likewise for, you know, CCI and MACD, these things will all tend to flash overbought, oversold signals at the same time. But I saw this chart and I said, okay, well, show me a buy signal. And I got you know, I buy here because, you know, the moving average were over each other and the Donchian channel got broken, and oh, but yeah, maybe I wouldn't buy there because this, and it's like, oh my gosh, you cannot make a decision with a chart like that. And what a lot of traders struggle with is the fact that you don't need to be right as often as you think, but you certainly need to be able to make a decision. If you can't make a decision, well, then you're in the wrong game, and you will never, ever, ever have all the information. We're always making our decisions in a little bit of a vacuum. That's why it's risky. All right, very nice test of the extreme. Let's see if we get a short signal here. Again, I'm not going to go crazy on a short. I'll take a single contract. I'm looking for a little bit of a reverse off of today's rally, maybe get down into that opening gap. The market's been plotting higher, but it has been plotting. You can see here since the top of the hour, we've kind of had a little bit of a sideways drift going on. Come on. So if problem number one is trying to find the holy grail of signal indicators, you might be asking, what is problem number two? Problem number two is probably overtrading, trying to trade that signal too frequently, having a production line mentality. That's a sure way to blow up your account. And problem number three would be money management. Risking too much. Problem number four would be trade management, not having a proper way to manage your trade, or being so afraid of your trade that you roll your stops far too quickly. Yeah, Andre says problem number 5 could be that there is no holy grail. No, they're not in trading. Not in trading. Yeah, and this is it too. Francisco says, I have all of the above. And we all do. That's why trading is so difficult. Aspen says, ego is your worst enemy. Who likes to be wrong? And yet the most successful traders are the ones who are okay being wrong. Here's a great story for you. The market's not doing anything. I may as well entertain you with a bedtime story. And I wish I had made a note of this fellow's name. He was consistently one of the best floor traders. I think he was at the Chicago Exchange, but not that it really matters. And he was only a C-plus student in school, and his co-workers were all A-plus students, Harvard and Yale grads, and just real brainiacs. And yet he consistently outperformed them on the trading floor. And so, he was interviewed, and they asked him about this. They said, in so many words, you're not especially smart. How come you're such a good trader when all these people who are smarter than you are less successful? And he said, because I'm a C plus or was a C plus student, I'm used to being wrong. Right? He doesn't take offense when he's wrong. But if you think about it, all these people who were A plus students, especially coming out of Harvard or Yale or Stanford or one of these Ivy League schools, it hurts to be wrong. People expect you to be right. So there's a whole lot of humility, that the market's going to hand you. And it looks like we just had a news release or something spike the market a bit. I got tagged on that little hiccup. But again, that's the nature of a counter trend trade. Well, that little rally effectively ruined my number 2 signal that I was building. You can see here was the buying volume that made its way through. A big spike in buying. John's asking if you're using Trade Manager, where would you add contracts? Well, there's three ways that people tend to like to add contracts to a position. Now, using the Trade Manager, you should probably not use your risk percent mode to start a trade. Oh, well, wait a minute. Once you get it to break even, I guess you're home free. Okay, if you want it to be more aggressive, then go ahead, stay with the risk percent mode. Otherwise, you may want to control how many contracts you're actually entering with and going in with manual mode. But, well, here, let's dial this back a little bit. So the simplest way, if we took a trade, say that looked like this, and the market comes up, and now you're in a break-even type situation, right? Because you've reached your break-even trigger. We're assuming now you're not going to take profit on target. You could roll your stops up to here, essentially break-even plus 1. And you would wait for a little bit of a pullback. So the option now is to enter on a breakout above the pullback, or what some traders will do is they will follow the pullback lower. So because they anticipate a reaction like that, what they'll do is, if they recognize the market is in a pullback, they'll start pulling their order down with each bar, so that when the market does reverse, they get to buy once the trend resumes. It's a little bit more of an aggressive strategy, but it can certainly get you some very good entries. The third way to do it is to wait for the system to print another signal. And then enter on that. So you've got, those are your three options. You've got buy on the next breakout of a swing, buy on the pullback once a pullback has revealed itself. You don't want to be too quick on those pullbacks, right? You don't want to, just because a bar goes lower for 1 or 2 bars, don't get too anxious to start to buy. Let it wait, wait it out a little bit. See if it's actually pulling back or if it's merely just a little hiccup. But we're getting like 3 or 4 or 5 bars counter trend. Then, yeah, go ahead, throw an order in above the last bar and try to pick up the reversal. And then the last method is to wait for another signal to print. They all work until they don't work. This strategy here, like I said, is a little bit more aggressive. However, by gaining the earlier entry, sometimes you can actually get into a profit position before you have to do anything, or it allows you to, allows you to do something with your stops. So let's say the market goes up and then flounders and comes back down against you. If you entered down here, you can actually bring your stops up to break even again, maybe even lock in a little profit. So my personal preference is for the pullback entry. It's going to test your nerves, though, I will tell you that. The easiest entry, and probably the most common entry, is to buy a breakout or to add to a breakout. If we ever get a counter trend signal here and I attempt a short, I will I will try to show you how that's done. Yes, John's asking, does the pullback have to stay above break even? Well, yeah, otherwise you'll be flattened on your total position unless you want to try to re-enter on a pullback. But my intention is once the trade is to a point where it's essentially a break-even trade, then you can look for a pullback and look for a buying opportunity. Yeah, Anthony says you keep it real by saying it will test the nerves and the stomach. Yes, sir. I know from firsthand experience. And I've said this before too, but for the benefit of those of you new to the trading room, trading will reveal more about you probably than you care to know, or maybe even than you thought you knew about yourself. It will tell you all about your fear and greed and your nerves, and I'm not saying any of these things in a negative connotation. You know, words like fear and greed, inherently they carry negative overtones, but we're all fearful, we're all greedy. I'm not going to give you the Gordon Gekko speech, but it's important to know where your fear is, where your greed is. And again, no negative connotations, but let's say you took this number 3 signal right here. All right. And let's say you chose to put your stop down here. And let's pretend for a moment that we're running this trade out, that it has not hit our profit objective. Well, when you were up here, you had, well, maybe it was probably kissing $150 in open profit. How fearful are you to lose that $150? And again, there's no judgment here. For some people, they'll say, well, 150 bucks. I would rather try to hold out and see if I can't run this trade out. Other traders will say, 150 bucks? Are you kidding me? Give me that 150. I want it right now. I would be very upset if the market reversed and tagged me out at break even. What about the $240 risk that you have? You know, with that and the $150 open profit, you've got nearly $400 in play here. How do you feel about that? And again, it's not a judgment, it's just how do you feel about it? I can tell you one more story. I was at a fellow's house in a beautiful little community just north of here, right on the ocean, just a gorgeous piece of property. And I noticed his computer setup, and it looked a lot like a trading rig. And I asked him what he did for a living, and he said, oh, he's a day trader. And I said, oh, really? So, of course, you know, you start sharing stories, and it was interesting to see how he did things and how I do things and so on. I asked him the natural question, how do you enter your trades? What do you use for a trade signal? No word of a lie. He said, I look at a chart and I see how it makes me feel. No, I'm not kidding you. If the chart makes me feel like it's going to go up, I will buy. And if the chart makes me feel like it's going to go down, I will sell. Now, one thing you have to understand here on the West Coast, we have a lot of, second and third generation hippies out here, so it's not that uncommon to hear somebody talk that way. And I said, oh, really? And he said, yes. And, looking around his house, I could hardly fault him for his entry system. And so I had to ask more. I had to find out more about how he was trading. And it turns out that he also trades for other people. He has a fund that he trades. But when he does his trading for other people, he asks them this question. He says, if we are in a trade and I'm up $50, do you want me to take the $50, or do you want me to, if there's a potential to make $200, do you want me to hold out for the $200? Fair question, right? How would you answer? Now, those of you who have heard the story already know where this is going, and some of you probably suspect you know where this is going, but honestly, how would you answer? If I ask you just off of the cuff, okay, we're in this trade, we're up $50, but there's a chance we can make 200. Do you want me to take the 50 now, or do you want me to hold on for the potential 200? Most of you, be honest, would say, I would try to hold on for the 200. Shoot, I would. I would tell him that. And he said to me, he said, wrong answer. The right answer is take the 50 bucks. So here is a fellow who is literally trading by his gut, but his money management is second to none. I have never seen such a good money manager. And I have met a few trading people over the years. His skills in money management are unrivaled. So think about that for a moment. All the time and energy that we spend trying to find a good entry system, and here this guy is literally earning $1 million a year or more trading, and he's doing it by his gut. But his money management, pardon me, is exceptional. And I tell you, that was a real eye-opener for me. I thought I was a decent money manager. No. When this guy doesn't mess around, if the market tosses him, 50 bucks, see you later. He doesn't care if the market goes to 200 or 300 or 500. He'll re-enter, of course. Grab another 50 along the way. But what a lesson in trading that was. Francisco asks, what is the risk? I would ask him, what's the risk? Well, he was trading stocks, not exactly penny stocks. He wasn't a pump and dump kind of guy. But he was trading, lower value stocks that were in the high teens, low 20s. But there were a lot of times that I asked him, what do you do when the position moves into the red? He says, well, I found that if it goes down, it will come back up. And of course he's right. Except for penny stocks, what stock really makes a nosedive into the abyss other than stuff like Briex or Enron? But if you're buying shares in Visa or whatever, Yeah, it may go down a little bit, but it'll come back up. Visa ain't going anywhere. Floyd says so he gets killed in a market crash. Well, yeah, but when was the last time the market crashed? Like really crashed? 90 years ago? You know, the crash back in the 80s is a blip compared to that. Overall, the stock market has been, except for the crash in 29, has been going up for 100 years. That's why it's so hard to short the stock indices. And I'm not saying there won't be a correction. I firmly believe we are in the middle of a correction. I firmly believe before the end of the month we will see a more significant move lower in the stock market. But a crash? No. The talking heads on TV and in the news will be running around waving their arms, yelling the sky is falling, but it won't. Well, I don't know if I'm going to get that counter trend opportunity today or not. Market's still plodding higher to sideways. Got a couple red bar buy signals here now. Watching for another test of the extreme, right? Hit the profit target, so maybe we'll see a turn here, maybe. Yeah, Steve says North Korea could cause a crash. Folks, if it comes to that, we're going to have bigger things to worry about than a stock market crash. That'll be the last thing that you're going to be concerned about. Or the second to last thing you'll be concerned about. Andre's asking, could you please share your money management secrets, please? Well, the secret to money management, Andres. Here we go. Number one, don't risk more than you can afford to lose. Number two, keep your stops out of harm's way. Traditionally, I like to go 2 swings back. I was just reading Francisco posted here. He likes to enter on a pullback close to the ATR because he likes to use the ATR as his stop. Okay, that's fine. So Francisco might be looking, you know, if he was watching a pullback here, the market bounces, he may be in here, his stop may be down there. That's great. But if you're using your risk percent mode, and by the way, this is not a signal, I'm just pointing it out. I just want to make the point that, look, your risk is $400, whether you buy down here or whether you place your stop right there or whether you place your stop down here. Oops, hit a little bit of a rounding error. Doggone it. One more try. There. Your risk is still $400, but what has changed is your position size, right? With the tight stop, you're running 6 contracts. With the loose stop, you're running 2 contracts. Now, Francisco, I'll save you the typing. I know he's going to say, well, I'm not going to trade 6 contracts. So my question to you would be, well, why not? Oh, well, the stop is too tight. I might get stopped out early. Yes, but why would you not try to optimize your earning? That's the whole point of using position sizing for trading, is that you're going to capitalize on your earnings. You're going to maximize your earnings when you get them. I know we went through this just the other day, but allow me to diverge a moment here. You know, and again, I don't mean to sound facetious when I say stuff like this, but if trading is a hobby, then go ahead. Just go in with your singles, your little onesie-twosie kind of trades. That's fine. There are less expensive hobbies than trading, certainly less frustrating hobbies than trading. But if you're going to trade to make money, then trade to make money. And the way you make money, or one of the ways to make money, the way I believe is the soundest way for you to make money, is via position sizing. Because what position sizing does is it not only protects you on the risk side of the equation, but it maximizes your earnings on the reward side. So again, I'm not going to spend a lot of time on this. We went over this the other day. You can go play with this tool on your own. It's at indicatorwarehouse.com/money expert. But here's Joe, showing he started at 10,000, finished at 13.5 if he had used position sizing. Okay, that's not a bad curve, very aggressive on his trading, but he could have ran that up. Instead of 13.5, he could have been up around 23.5 or 24,000. But here's the deal. It's a 50-50 signal. He's only risking 2% on a $10,000 account. I like this curve. This is a very realistic curve. Joe starts at 10, finishes at 14. We start at 10, we finish at 15. So the subtlety is there, but without doing anything different other than using correct position sizing, you have earned an extra $1,000. An extra grand for doing nothing different. Yes, the drawdowns, you suffered a little bit more of a drawdown, but even the drawdowns, if Joe was on a losing streak here, the drawdowns would even up because you would risk less and less as your account size diminished. Okay, here there was no advantage or disadvantage to using position sizing. We're exactly the same, no worse off. This equity curve is a little bit, well, mathematically it's true. In real life, I suppose, though, Joe hit a good running streak through here. You can see drawdowns were minimal. So he ran his account up to 15,000, but he could have had 25,000 with a little bit of position sizing. This is a very realistic curve as well. So this is like my equity curve. I got a nice run up, and then I hit a string of losers. I get a run up, I get a string of losers, a run up and a string of losers. But again, at the end of the day, I'm better off doing position sizing than not. All right, so that's something for you to think about, something for you to experiment with. But I think on the whole, if you do those two things, if you don't risk more than you can afford to lose, and if you give your trade a reasonable stop, give that trade a chance to work out. I know the DTS system, Raptor, is very good at picking up initial momentum. You know, you produce the signal. It's rare to see a very deep pullback against you. Here, the market staggered for a couple of bars before it went up again. But there have been times, or there can be times, that the market does make a more significant retracement before eventually going on in the intended direction. So the big question, of course, is why? Why should you get stopped out early? Stop loss is not a loss unless it gets hit, right? John says, so it's better to use a smaller position size with a larger stop? Well, I think so. And again, trading is a very personal experience. But I remember a good trading friend of mine, when I was one of these guys who would take a trade, this is how I would set up my trade. I would go here, my stop would be right below the entry bar, and small wonder I would get stopped out time after time after time. I would take 5, 6 stop outs on a day, and my trading friend said to me, Eric, why would you absorb $300 in losses on the day and not take a $300 stop? At the end of the day, it's the same, isn't it? Yeah, I guess it is. So what do you think the chances are that the $300 stop is going to get hit before the $50 stop? Probably not that good. Yeah, probably not that good. So, you know, like I say, it's a learning curve. We're always learning. I still learn stuff. But like I said, I think you need to avoid strangling your trades. At the very least, go one swing back. If you can stomach it, go 2 swings back. That kind of trade has a very good chance of working out for you. All right, gang. I'm still waiting on this test of the extreme. I'm not sure if I'm going to get it or not. We'll hang out here for a few more minutes, see if we get that test of the extreme, that possible sell, and I'll try to show you how I may add to a position. John says, I learned something new every time you discuss stops and risks. I call it the best kept secret on Wall Street. You know, people are always interested in entry signals. You go to any trading forum, and that's all they talk about. What settings do you use for stochastics? You know, what's the best setting for my RSI? How should I use Keltner bands? What settings should I use? And oh my gosh, it's an endless debate with no real answer to it. Trading, as I've mentioned before, you need three components. You need to have a good entry, to be sure, but you also need to have money management and trade management. One without the other isn't going to, or one without the other two isn't going to work for you. Well, there they go. It looks like they're pressing up a little higher again. So remind me on Tuesday, and I will endeavor to show you how to do that, John, how to add to an open position. In the meantime, I hope everybody has a wonderful weekend, and a reminder once again, no trading room on Monday. I'm not going to be available on Monday, but I will see you on Tuesday. We'll talk to you then. Bye for now.